Welcome all. We discussed about legal liability insurance under the group of miscellaneous insurance. In this session, we are going to see the other risk covering insurances in the miscellaneous insurance, which are business insurance and personal package insurance. First, we start with business insurance. It covers various risks related to business activities. We will discuss one by one. First one is burglary insurance. This policy covers contents of business premises against the risk of loss or damage by burglary and housebreaking only. Fire risk must be covered by the issue of a separate fire policy. The property insured is covered only if a loss takes place while contained in the premises described in the schedule. Property covered. The property that can be covered under this policy are stock in trade excluding any class of stock specifically insured, goods in trust or on commission for which the insured is responsible, fixtures, fittings and utensils in trade, cash and currency notes secured in locked safe. Insured perils. Burglary or housebreaking of property following upon felonious entry of the premises by violent and forcible means. Theft by a person in the premises who subsequently break out by violent means and forcible means and hold up. Next, damage to the premises by the burglars falling to be made good by insured. Special conditions. Here we are seeing the special conditions. The first one is reinstatement of sum insured. Immediately upon the happening of any loss or damage as prescribed in the policy, the total sum insured upon the various descriptions of property which have been lost or damaged shall be reduced by the amount of loss or damage, and such reduced sum insured shall be the limit of the company's liability in respect of any further loss or damage occurring during the current period of insurance, unless the company consents upon the payment of additional premium to reinstate the full sum insured. Next, maintenance of books and keys. Maintenance of books and keys. In this, daily record of the amount of cash contained in the safe or strong room shall be maintained, and such record shall be deposited in a secure place other than the safe or strong room. The keys of the safe or strong room shall not be left on the premises out of business hours or in the vicinity of safe or strong room. Shopkeepers insurance. So, this policy is designed to cover various risks and contingencies faced by small shopkeepers under a single policy. The policy provides protection for property and interest of the insured and his partners in the shop. The shop premises must conform to the specification of Class A construction as per fire tariff. The policy is issued as a package policy in which insured is given a number of coverage which are generally available as separate and individual policies. The policy includes fire and allied perils, burglary and housebreaking, money insurance, pedal cycle, plate glass, neon and glow sign, baggage insurance, personal accident fidelity guarantee, public liability and workman's compensation liability. The shops where the value at risk includes the value of the building if owned by the insured is not exceeding rupees 10 lakh at any time during the policy year and are eligible to buy this policy. The insurance would not permit this policy in case the value of risk is more than rupees 10 lakhs at the time of taking insurance or likely to exceed this limit any time during the period of insurance. Jeweller's block insurance. So, this policy covers all type of risk relating to jewellery and jeweller can take an insurance policy of all jewellery which is in his possession, whether that is for sale or belongs to customers or kept for cleaning or repair and the like. Insured perils. This policy covers the jeweller's entire stock of gold, including others that are entrusted to him. Property entrusted to insured jeweller is insurable up to his interest arising out of legal liability or money advances on the goods. Jewellery, silver or gold ornaments, pearls and precious stones, materials necessary for the smooth functioning of business, bank documents, etc. Office furniture and fixture which is in the insured's business premises. These mentioned property which is in the insured's premises or in his locker is covered against the risk of burglary, fire, lightning, theft, explosion and housebreaking. The other property is covered against all risks other than those which are specifically excluded by the policy. This policy is normally issued for 1 year. What are the exclusions? The policy does not cover certain losses which include loss or damage caused by war and allied perils, loss of gold in cleaning, repairing, etc., shortages noticed during stock verification, loss of insured property at any public exhibition, losses due to ionizing radiation or nuclear weapons material, theft or disappearance of jewellery from a vehicle while such vehicles are left unattended, loss of or damage of insured's property while in window display at night and necessary precautions are not made. Money insurance. This policy is intended to protect banks and industrial business establishments against loss of money which may be carried by messengers and be in transit from one place to another. Cash insurance is essentially a modified version of burglary insurances. Here cash means cash unless otherwise stated means current coins, bank and currency notes, checks, postal orders and current postage stamps. Insured perils, which refers to loss of cash for the payment of wages, salaries and other earnings or for petty cash in direct transit from the bank to the insured's premises from the time the cash is received at the bank by the insured or the authorized employees of the insured until delivered at the premises or other places of disbursement and while these until paid out, provided that out of the business hours. Such case shall be secured in locked safe or locked strong room on the premises. Checks drawn by the insured to provide for such case are covered in transit from the premises to the bank. Loss of cash other than described in item 1 in the personal custody of the insured or the authorized employees of the insured while in direct transit between the premises and the bank or post office. Then loss of cash other than described in item 1 and item 2 collected by and in the personal custody of the insured or the authorized employees of the insured whilst in transit to the premises or bank within the period not exceeding 48 hours from the time of collection. Furthermore, the implication of the provision relating to the time limit of 48 hours is that loss due to fraud or dishonesty of any cash carrying employee, the discovered is not covered unless the same has occurred while in transit and is discovered within 48 hours from the time of collection. In other words, a loss attributable to an employee is covered only if The first one is the employee has been entrusted with the duty of carrying cash. Second, the dishonest act is committed by such on employee during transit. Then the theft is accompanied by simultaneous flight of the employee, and the fourth one is the dishonest act and the flight of the employee are discovered within 48 hours from the time of collection of cash by employee. Fourth, loss of cash other than described in item number 1 whilst on the premises during business hours or while secured in locked safe or locked strong room on the insured's premises out of the business hours against the risk of burglary, housebreaking, dacoity, robbery and hold-up. Special features. These are the special features where only cash in safe is proposed for cover. The policy should not be used and instead the burglary policy should be used. Second, at the end of the policy year, a declaration giving actual carrying throughout the year should be obtained from the insured and premium finally adjusted accordingly within 30 days from the expiry date of the policy. Fidelity Guarantee Insurance. The broad purpose of this insurance is to identify the employer against direct pecuniary losses sustained through acts of fraud or dishonesty by an employee in the course of employment. The basis of fidelity guarantee originates from an employer and employee relationship or fiduciary relationship. The three parties are employer, employee and the insurance company. Insured perils. The perils covered under commercial fidelity guarantee policy are mentioned in the operative clause, which suggests that the policy will indemnify the person insured against any pecuniary loss sustained by him on account of fraud or dishonesty by his employees, subject of course to the limits of indemnity incorporated in the schedule of the policy. The term fraud or dishonesty are wide enough to cover losses suffered by the insured on account of forgery, embezzlement, larceny and misappropriation and default of the employees. The policy hinges on the employer-employee relationship and therefore, in all the monetary transactions, the employee is expected to discharge his duties honestly and faithfully. If the employee branches the trust reposed by the employer and creates any loss, the fidelity guarantee policy covers in. The first one is neon shine insurance. This policy is devised to give insurance coverage for neon sign or glow sign against the given below things. Insured perils. Loss or damage to the installation or any part thereof loss. The first one is by accidental external means, by fire, lightning, external explosion or theft. Here are the things which are excluded under this policy. This policy does not cover the loss due to the reasons which are given like fusing or burning out of any bulbs or tubes arising from short circuiting, any other mechanical or electrical defect or breakdown. Other things are like repair, cleaning, removal or erection, wear and tear, depreciation or deterioration. Then damages to the tubes unless the glass is fractured. Next, overrunning, overheating or strain, atmospheric conditions, consequential loss, riot, strike and civil commotions, earthquake, flood and other natural calamities, nuclear risks. Now, what is duty insurance? This policy is normally taken out by an importer to cover the payment of actual duty on the imported goods. When this imported cargo arrives in India, certain duty is leviable by the custom authorities. This duty can be ensured either by including it in the marine cargoes policy sum insured or by purchasing a separate duty policy. This policy is not an agreed value policy, and that is why it is different from marine cargo policies which are issued at an agreed price. The salient features of this policy are: the policy is one of the pure indemnity nature. The insurer's liability for duty will arise only if the duty has been actually incurred by the insured. If cargo is lost before arrival at destination, the insurers will not be liable in respect of duty. This insurance is granted only if there exists insurance on CIF value of cargo itself. This insurance is granted only to the party in whose favor the import license has been issued or is officially endorsed. Insurance of duty is granted only before arrival of vessel at the destination port. Next, the rate of premium for insurance of duty is generally charged for covering the CIF value of the cargo by itself. The cover is restricted to the actual duty payable. The time limit for giving the notice against the custom authority is 6 months from the date of payment of duty for refund or proportionate delay. If any imported goods are pilfered after the unloading, the proper officer has made an order for clearance for home consuming, that are or deposit in a warehouse. The importer shall not be liable to PA duty leviable, and hence any duty paid in advance should be claimed as a refund from the customers and not from the insurers, as the same cannot be considered in duty insurance policy. From these things, it is quite evident that the duty clause in a marine cargo policy is a strict indemnity cover which is not assignable, and the claim amount is payable only if the insured cargo is lost after clearance for home consumption and marine loss is settled against the same. Personal package insurance. These insurance cover the various things like mobile phones insurance. In this policy, the insurer will indemnify the insured for the loss of or damage to the cellular phone by fire, riot, strike, malicious damage, terrorist activities, theft and accident. On payment of additional premium, the cover can be extended to indemnify insured against fraudulent use of cellular phones following the physical loss or damage to the cellular phone, whereas such loss is total loss for a time limit of 24 hours from the time of recording by the cellular operator of fire fraudulent call, subject to a maximum limit of rupees 5,000 for any loss or any series of loss in any one period of insurance. The premium for this extension is normally charged at rupees 50 for any one period of insurance. It is the requirement of this insurance that the sum insured shall be equal to the cost of replacement of the instrument by new instrument of the same specification and same capacity, including all kinds of taxes and duties. The basis of indemnity is also limited, like for replacement of the mobile phone. Further, the liability of the company for the instrument shall also not exceed in the aggregate in any annual period of insurance the sum set against such instrument in the schedule. The company may reinstate, repair or replace the instrument cost or damaged instead of paying the amount of loss or damage, and on payment of claim, it reserves the right to retain the salvage or otherwise. The amount of salvage may be deducted from the amount of claim admitted against the liability of said loss of damage to the cellular phone. Baggage insurance. This policy is intended to cover accompanied baggage, not dealer stock or traveler samples during the specified journey, which includes air, sea, rail or road travel undertaken by the insured. The risks covered are burglary, theft or damage by accidental means. The mute of the journey is specified in the policy and the cover is operative only when the insured is travelled by an accepted mode of travel on the specified route. The cover is also operative while the insured temporarily resides in any hotel or rest house during the specified journey. Proposal form should be fully completed as regards description, contents and value of each package. Further, if jewellery, valuables and items listed in the exclusions clause are to be covered, then full description and individual value should be noted. In the view of the high moral hazard, these covers are sparingly granted by the insurers and that too only to known clients. All risks insurance. This policy grants very wide cover in respect of valuable property and is normally issued only to very good clients. Barring a few perils like earthquake, war, etc., tile cover offers very comprehensive protection to the insured property against many perils, including any accident or misfortune not expressly excluded. Insured perils: fire, riot, strike, terrorist activity, burglary, housebreaking, larceny or theft, accidental loss or damage. These properties are not covered like fountain pens, spectacles, musical instruments, cufflinks, clothing, cigarette cases, silver utensils, money, securities, manuscripts, deeds, bonds, travelers' checks, books of accounts are not covered under this policy. Special features: the cover is strictly restricted to personal jewellery ornaments and other such valuables which should be specified and separate value declared against each. Declaration of full value should be insisted upon, but valued policies should not be agreed to. All articles should be sufficiently described in detail to permit identification. In case of jewellery studded with pearls, diamond or other precious stones, valuation certificates of jewellery with number and detailed description of the stone should be obtained. Furs and similar costly items, personal belongings can also be included, but articles like fountain pen, spectacles, etc. should not be covered under this policy. However, if an all risk policy holder insists on coverage for clothing, silver articles and the like, this may be agreed to, but the policy should be endorsed restricting the cover on such items to fire and theft risk only. The special conditions are: single article limit. Unless specifically and separately stated, the company's liability in respect of each article or pair of articles shall not exceed 5% of the total sum insured under this policy. Articles in pairs or sets. Where any item insured hereunder consists of articles in pair or set, the company's liability in respect thereof shall not exceed the value of any particular part or parts which may be lost or damaged without reference to any special value which have article or articles may have as part of such pair or SE of more than a proportionate part of the insured value of the pair or set. Householders insurance. This policy is designed to cover various risks and contingencies faced by the householders under a single policy. The policy provides protection for property and interest of the insured and his family members who permanently reside with the insured. This policy covers building of Class A construction, burglary, housebreaking, larceny or theft, all risks, plate glass, breakdown of domestic appliances, TV set, pedal cycle, baggage insurance, personal accident and public liability. The damage to building against fire, lightning, explosion of gas in domestic appliances, bursting and overflowing of water tanks, apparatus or pipes, aim or articles dropped therefrom, riot and strike, earthquake, flood, storm, cyclone and landslide damage are covered by this policy. Jewellery and valuables against loss or damage by accident or misfortune are also covered in this policy. Insures legal liability for death and for bodily injury to or loss of or damage to property of third party, whilst cost in or about the insured premises not exceeding in all for compensation and litigation expenses up to limit of rupees 25,000 for any one accident or a series of accidents arising from any one event and for all accidents during one period of insurance. This policy does not cover inter alia loss or damage by war, civil war and the like, depreciation, wear and tear, consequential losses and the like. We are discussing on miscellaneous insurance. In the next session also we are going to continue the same. See you all. Take care.